Hello and welcome to another update video on ADA. We are dealing here currently with the ADA larger time frame chart, and on this chart the idea is that we're still in a triangle. Okay, well, that triangle could complete at any point. I don't prefer the bearish outcome, not as long as we're holding above the 51-cent level. I think that is quite important. The bearish outcome would mean that we're heading for another low here. Okay, but it would require a break below 51 cents to actually confirm that further. So as long as we're holding above 51 cents, the idea of, let's say, the idea of a triangle pattern remains valid. So that's very important to understand. The scenario that we're tracking is a potential wave 4, which might have actually completed this E wave now. Alternatively, I would say within the same scenario, so again, within a directly bullish scenario, it is entirely possible that D wave is getting another extension. That's why the green line is on the chart. Really only a break above the green line would kind of unlock the direct breakout to the upside, because it would kind of rule out an extension of the triangle. Let me explain. When we're dealing with a triangle like that, it is a so-called A, B, C, D, E pattern. So lower highs, higher lows. With the E wave, normally, when it's done, we can watch for an upside breakout, a direct breakout to the upside, but it should be quite rapid. So I tried to prepare everybody for that potential, okay? If it happens, shouldn't be a surprise. But essentially, it takes first a break above the 86.5 cent level, which is the swing high from the 12th of May, and then a break above the $1.18 level is needed to actually confirm that further. Because as long as we're printing lower highs and higher lows, the triangle can extend. See, it's just a range, but with a tendency to break out to the upside as long as we're holding 51 cents, and I get that from the overall market context. So I'm tracking here still a fourth wave, watching for signals that a low is in, and then a fifth wave to the upside should overall, take us higher towards next $1.70, potentially even $2.40. Those would be the next Fibonacci levels once we break above the December swing high. Let us also take a look at the shorter time frame here. You might remember it from yesterday's video. Typically, we do all these things together in the video, right? So I don't need to explain that much because we did it together. We defined yesterday this target zone for a fifth wave to the downside. Remember, we did that in the video together, between 63.6 cents and 60 cents. I think when I made the video yesterday, when I recorded the video right like same time yesterday, the price was just trying to start the decline, reaction to the resistance area, and the idea was to reach this target zone between 60 cents and 63.6 cents, and then we wanted to see if the market could form a reaction, could show a reaction here. I also highlighted there's likely going to be some structural support here in this region, specifically around that low, around 60 cents, where we also have the 178.6 extension. But overall, it's this range here. So market dipped into it, fulfilled, completed the wave count to the downside. And we might actually be in the C wave to the upside right now. That could be wave C in the white count to extend the D wave, okay? So again, I explained how a D wave can extend. Or we are already starting the fifth wave to the upside if the entire triangle is done. We don't know that yet, of course. I mean, those are two short-term bullish scenarios. The idea was we need to get this downside move completed, ideally in this region. If from this region we see an impulsive looking upside reversal, then this is our first signal that at least a local low is in place. And then over the coming session, we're going to build the case for further upside. And maybe based on the structure, we will be able to tell whether it's the fifth wave to the upside or just the C wave of the D wave. That will become clearer over the coming sessions. For now, I think when we look at this structure here, it's just important to understand the price potentially completed the correction. This swing low from yesterday, as long as it holds, has the potential to be a more substantial low, and we're now watching if the market can break above the last swing high that formed at around 70.6 cents to confirm further a low is in, and then generate the upside momentum to the upside that we actually need. Yeah, that's the update on ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye bye.